and welcome back to another Money Tip Monday. My name is Lizy Hofer and I'm a residential loan officer here in the Phoenix area, teaching practical money tips to help you make smart home purchases. Today on Money Tip, I wanted to spend a little bit of time answering some questions that I've been getting about, is the market going to crash? What does a buyer need to expect buying in this crazy time? If you're in the process of refinancing, what should you be expecting? And just overall market predictions and what I really think is going to happen with this crazy housing market. So now, before I get into all of that, I am going to ask you to like, comment, and subscribe to this awesome channel because I never want you to miss a money tip in the future. So where to start, right? So I get questions all the time about what I think is actually happening in the economy. Do I think the market is going to crash? Am I fearful of a housing crisis? Is there going to be this massive increase of foreclosures and short sales? And what I can say to answer that, and not because I'm in real estate, but because I'm somebody who understands, supply and demand. I do not believe that today we are going to experience a housing crisis. I don't believe that values are going to decline. I don't think that anything is really going to be massively impacted in terms of housing, simply because for the last year and a half, we have been so undersupplied with houses for sale in the marketplace in most cities in the country. Now, when I say that, what I mean is the number of houses that are available for sale is less than the number of people that want to purchase them. And so we've been in this economic climate of a seller's market for kind of a long time. And there would have to be a dramatic shift in the number of houses that are for sale. The follow-up question that I've been getting when I say that though is, well, aren't there a ton of people that are unemployed, that can't make their mortgage payments, that are gonna have to sell their properties? And while there is a significant increase in the number of people that are now unemployed, we also have better programs to help people stay in their homes, right? So back in the housing crisis in 2008 and 9, there were no departments to help you restructure your loans, to do loan modifications. The banks weren't properly staffed, nor did they have the procedures in place to be able to help people. Now these banks have processes, procedures. They have an entire department called loss mitigation. And in this particular economic climate, we have what's called a forbearance that has been given by the federal government for federally backed loans, right? So lots of people have the ability to defer payments, to restructure, to work with their mortgage banks now than ever before. The other thing that I want to mention is that we've changed lending guidelines, right? So lending guidelines back in the day used to allow people to take out cash out all the way to 100 to 120% of what their house is worth. That has dramatically changed since the Great Recession. Now people have been capped out at 85, 80, and 75% of their value on their house, right? So they have a significant amount of equity as a buffer, right, in case they needed to sell. And you only really see a rise in foreclosures and short sales when people are not in an equity position, when their only option is to sell the house for less than what it's worth, right? People don't typically walk away from money, right? So while there may be more people who are selling right now, the thing is, we need it, right? We are not even close to a balanced market right now. And so more houses going on for sale means that actually more people will be able to purchase them. And there's so many qualified buyers right now and people that are wanting to refinance. So what can you expect if you are trying to buy in this new COVID era? So a couple of things, right? So if you're a W-2 worker and your income has not been impacted at all because of COVID, it's going to be business as usual. We will have to do additional employment verifications, and we are going to ask you to have updated assets and more recent documentation. But aside from that, it's pretty much the same type of process that you would have experienced a couple months ago. If you are somebody that did have a decline in income, right, chances are we might not be able to use your overtime and your bonus anymore, and we may wait to qualify you until we can see that your income is now back to normal. Where I've seen this really impact borrowers, truthfully, are clients that work in the restaurant industry, right? Their main income is tips, right? It's different shifts. If we can't see that you've been working those, we typically have to average for 2 years. I see that this is actually impacting that section of the population. Salespeople who deal a lot in commission, workers who deal a lot with mandatory overtime that have stopped having to do it, like construction workers. So it's really, really important that you speak with your loan officer, and that if you are in the process of purchasing, that you wait until your schedule has recovered before you actually figure out what your buying power is. So I will tell you that additional income, secondary income, any fluctuations with bonus and commission, those types of workers are going to have significant changes with their pre-qualifications, and you're definitely going to want to speak to a loan officer and update your pre-approval. Now, if you're in the process of refinancing, what can you expect? Well, first and foremost, it's going to take longer than you think. Right now, our company is about 30 to 45 days, but I've heard some companies are as long as 90 days, and they're quoting close of escrows in July and August. I think that's pretty common. We're also hearing that banks aren't able to fulfill their refinance portfolios. So that means that they've run out of liquidity, based on a certain part of the month. And so then refinances will have to roll to the following month. That is pretty common. I'm also seeing that banks are just not approving refinances right now, especially for different types. So like cash out refinances have gotten a little bit more difficult, and investment properties have become a lot more difficult to finance. So if you find yourself in that scenario, you definitely want to make sure that you're shopping lenders, right? Just because one person says no to you in this environment doesn't mean that you can't qualify for a loan, and doesn't mean that you can't get approved. That actually is the same thing for buyers in this market, because some of the other things that have changed are debt to income ratios per lender, credit scores per lender, right? Whether or not people are allowing cosigners or not per lender, and interest rates are varying quite a bit when it comes lender to lender, depending on the type of program and their risk threshold for your type of loan. So my best advice in this market, if you're a purchaser or a refinancer, is that you shop, and that you really do shopping on the same day with a variety of banks to make sure that you are getting the best scenario that meets your needs. Now, as for interest rates, this is always a hot topic for me. People want me to quote on what's going on. Here's what I can say. The government has committed to buying mortgage-backed securities until the economy recovers. It doesn't look like the economy is going to recover by the end of the year, so we can pretty much guarantee that interest rates are going to be historically low until then. Now, whether they're 3% or 3.5% or 3.875%, right? I can't tell you what that is, because the market does move. And, I used to tell you, hey, when the stock market is doing great, interest rates are doing bad. That rule does not apply right now. None of the old tricks of, watching the 10-year note, none of that works right now. You really have to be working with somebody who watches the mortgage-backed security market every single day, right? And that really has a pulse on what's going on, what economic reports are coming out, what big announcements are coming out from the Fed, right? You really need to work with a loan officer who really pays attention to that right now, because a day could mean 0.25%, right? Which it hasn't been that kind of environment in so many years. And so it's so important. But I will say that overall, my forecast is going to be that interest rates stay relatively at their lowest till the end of the year. So a lot of times when I post this information online, a lot of the comments end up saying, well, of course she's going to say that because she's a loan officer. Of course she's going to say that because she's in real estate. And I will tell you this, it's very difficult for somebody in my position, one, to know the future. And I am somebody who just tries to keep it real, because the last thing I want in life is for one of my clients to come and say that I put them in a terrible loan and they ended up foreclosing. It's literally my worst nightmare, and most people's worst nightmare if they're working in finance or real estate. So I will not say that I give you this advice because of that. And I will also say that you need to question your sources. A lot of these people on the internet, your neighbors, your friends, if they just have feelings, right, because they lived through the last recession about what's going to happen, that's not a good enough information source, right? They really need to understand what is happening in today's market that actually has an impact on you, because most people just listen to mass media news, they listen to their friends, their family, their neighbors, and they end up losing out big time. And I can tell you that The most tried and true methods in any economy are always consistency, buying based on your budget. It's always following the rules of finance, right? Not overextending yourself, consistently saving, dollar cost averaging, right? All of these tried and true methods you can see in the wealthiest Americans in the country. So I'm just trying to pass on the same advice that I personally use in my life and just provide some additional expertise out there, because I really just feel that there isn't enough information out there educating clients on just a regular basis. So that's actually why I put out this information. Disagree with me if you want to. It's a free country. But anyway, that's what I have to say today. This is your big market update. No, I don't think the market is crashing. Yes, I think interest rates are going to be low. And if you're a buyer and or a homeowner refinancing in this market, expect additional conditions. You have to check in with your loan officer multiple times. Expect updated paychecks, updated assets, and lots more questions. So I apologize for that in advance, and I appreciate you guys' referrals, your testimonials, and your spreading the word about these money tip videos. So until next time, guys, I'll see you on another Money Tip Monday.